How's it going, guys? I hope everybody had a great weekend and a great trade week as well. Hope everyone's loved ones are healthy, safe, doing well. So, we're going to start it off simply with a weekly breakdown, weekly range review, as always, on the 1 hour chart. While I have everyone's attention, and people have short attention spans. Then as we go on, we're going to get into a lot more of the topics that I want to cover, and then we're going to get into like daily bias, really. Like, I really want to cement this through, especially towards the trading community, because it's very simple to find daily bias. And then we'll talk about Purge and Revert, that model by ICT. And then we'll also talk about some currency pairs that people want to see speculation on. So normally, if I was to study, right, this is how me personally, like if I were to come to the charts, hopefully everybody can hear me. If I were to come to the charts every week just to back test it, this is how I would look at the week. And those that are familiar know exactly what I'm going to do. I'm going to look at the weekly range, the entire week, break it down on the 1 hour chart. It's just easier to see in the eyes. It's not that specifically the 1 hour is better than the 4 hour, or the 4 hour is less superior than the 1 hour. It's not that. It's just easier to see the concept. So we'll start at Sunday. We'll find the most recent Sunday. And normally the easiest way for me to do it, I normally turn on the sessions indicator and it would show me. But if I had to show it like this, I would go to midnight each day. So we're going to each day, we're going to midnight. That's 12 a.m. noon, New York Eastern Standard Time. I live in New York. Deontay lives in New York. People ask me all the time, where do you live, Deontay? I live in New York. That's where I live. The markets tend, and they are, geared on New York time. It's not me that made it that way. Blame the people that coded the market in the New York Stock Exchange. It's not me that did it this way. Because people ask you, oh, what time is midnight? And I'm like, oh, it's midnight because I live in New York. At this point, now I got every single day. I got Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. Every single day of the week. The main key factors for you during this week is going to be Sunday's opening price and where price is relative to it. Where is it when price is trading throughout this week compared to where Sunday's opening price is? This weekly opening price is influential to the outcome of the weekly candle. Now, why is that? Because it is the opening price. It is fair value to the marketplace. Anything above this price point here is going to be premium. Anything below is going to be discount. Now, many people heard me say this several times already. Sounds like a broken record. But it's really key. And it's that simple for people to comprehend where overbought and oversold conditions are residing. So anything below this line is discount. Anything above is premium. Overbought, oversold. Your high probability or high odd sell scenarios, high odds, right? Sells are going to form above the weekly open. Your high odd buy scenarios are most likely going to form below the opening price. You can backtest almost 100% of all the last weeks, and you'll see that this same idea is normally found consistently week after week after week. However, it is up to you to figure out where this weekly candle is going to most likely draw. Is the next weekly candle going up or is it going down? That's the biggest hurdle for most traders. Once you figure that out, everything else falls in line. You just follow the ideology. You're looking to sell. If you think next week is going to go down, if you think the weekly candles, if I were going to weekly chart and look at this weekly candle, if you thought this weekly candle was going to go down by last Friday, so Friday comes along, it's the weekend, it's Saturday, it's Sunday, okay, you're partying, you're out with the boys, you're out with the girls, and then you kind of come back and buckle up on Sunday, where would you speculate price to go? That's where you do your homework on the weekends. where do you think the next weekly candle is going to go? If you think it's going to go down, it's most likely going to look like this, what I'm showing you here, what we got this week. You're most likely going to get the high on Monday, Tuesday, or Wednesday. Now, for you to pick which day it's going to form on, and if for you to catch it, it may be harder than you think. Because there's some days it's going to be Tuesday, and there's some days it's going to be Wednesday, and some days it's Monday. I don't really like the Monday ones, because normally Mondays I sit on the sidelines. I rather, and this is me personally talking to you as a trader and doing this for a couple years, I personally like to see Monday consolidate and Tuesday take out the high, and then we go lower. That's what I normally like to see. Tuesday high of the week, and then price goes lower. Sometimes I don't get that. And I can't guilt trip myself and say, oh, D, why did you not catch the high of the week on Monday? It's okay. It's not the end of the world because I didn't catch the high on Monday. But at that point, if I know that I couldn't catch the high on Monday here and price is going lower, can I still find buy scenarios? Yeah. Somewhere below this line, I could probably find some type of buy scenario. It may not be a huge buy scenario, but it may be something that gives me 15. It may give me like 20 pips. It doesn't have to be huge. But I know on one of these days, I could probably find a sell when price is above it, or I find a buy when price is below the line. Look at Friday giving a buy scenario at the end of the week. Counter trend day. The week was bearish overall, and then what happened on Friday? You get a pullback. If we look at any other pair, and I'm not trying to make this complex tonight, because I can sit down here and show the other, and I'm going to show the Purge and revert thing with the DXY and AU because people were asking. If I go now to Aussie versus the US dollar, completely inverse. Completely inverse. Now, why are they inversely correlated? Because this is a foreign currency and it's crossed with the dollar. That's why it's inversely correlated. When dollar goes up, Aussie goes down. When Aussie goes up, dollar goes down. That's it. Sunday's opening price, as you can see, where was the high probability buy scenario unfolding? You had 3 opportunities to catch a buy. 3. The market makers gave you 3 days to catch one. Monday, Tuesday, or Wednesday. You pick your poison. What happens on Thursday? You get a London close reversal. Thursday, 10 a.m. to 12. Price trends up and then starts finding the high of the week and then trends lower. You do get a buy stop raid here. Price comes up and takes out. Friday here. Price comes up because of the news. Price comes up, takes it out, and then runs price down. But overall, just looking at the ideology, buy. Where? Below. Buying below. This is like the easiest thing I could show people without complicating what trading is. If I had to show this to a kid, I try to tell people, I'm not trying to teach people as if they're like a sophisticated PhD doctor. If I had to go on the streets of my city, if I had to go to Manhattan City right now, walk the streets, and go teach a random stranger on the road how to trade Forex, this is how I would teach them. And they would slowly start to implement every other thing as they go along. But this would be the bulk of it. If I had to summarize what Forex was in a quick, short way, right, in a couple minutes, I would tell traders, look at the weekly open and follow your daily time frame. Those are the 2 things I would tell people every single time. And you can see it repeats over and over and over again. The phenomenon happens all the time, every week. Some people just are upset because they just don't get the bias. That's why. But when they go back and backtest and they see, oh, wow, the buy was here for the week and it kept going up. What could I have done better to come to the analysis or the conclusion that this weekly candle was going to go up? That's when you start learning bias and you start implementing those other things. If we come down to GU, so we go down to GU. I don't have it marked up, but it's pretty simple to mark it up for you guys. said, if I were to take the indicators, it just makes it faster for me because I know I've been doing it for a while, so I could tell where the days are. Midnight, another midnight here, midnight here, here, and here. Then we got the end of the week here. Boom. And you can see accumulation, manipulation, distribution. I don't have to get into that. Once again, this is Sunday's opening price right here. Draw this all the way out. It is the line in the sand. That dashed line. And I'll make it larger because I can't even see that. That's Sunday's opening price. Same ideas are still forming here again. Once again. The low of the week happened on Monday. You can see price comes all the way up here. It gives up all its gains though. So this candle looks indecisive. Because I know if this is the opening price and this is the closing price, going on the weekly candle, I could already tell it's a small wick body. It's a small body candle. I don't have to. I could just tell. It came back to the opening price. So when you look at it like this, you can tell that week made the low, ran all the way up here, open, it closed here. It closed close to its open. So it gave up all its gains. But overall, low on Monday, inverse dollar, and you can see it's correlated to EU as well. It's following EU. It's following NU. Same thing here. It's going up. But look at the buy scenarios. Every time price dipped down below Sunday's opening price, what happened? There was some type of buy setup. Here. What is this? What time period is this? This is London close. Look at the orange shaded area. London close. Price comes back down into a discount for the week. London close. Price goes back higher. Take this off. You can even see here. What's this? New York session. So you come here. You look at it here. What's going on here? You got your Judah swing on Wednesday. Right? You got London doing what? Breaking retail traders long in a premium. And what did they do up here? They're selling on them. They sell above the Asian session high. They bring it back below. Look at how the market makers specifically bring it back below the weekly opening price. Below midnight opening price, double confluence. Below 2 a.m. opening price. If you're using European open, 2 a.m. opening price. Or if you're using 1 a.m. open. Price brings it, they bring it all the way back below. And what happens? They're buying below here again. And you can see New York pulls back up. Gives you the distribution back to the correct side. Normally when I see the Asian session, small tip, when I see the Asian session break both sides, the first break is normally what I've been speculating price to go towards. So you can see here, which side of the Asian session was broken first? The upside, right here. Buy side was taken, then sell side. Odds are, price is probably most likely going to come back and take out buy side once again. And normally you would suspect London to be lower than this, but you can see you get a New York buy sell stop raid. Can't win everything. You're not going to catch the low of the day every single day. Sometimes the market makers are going to take you out. What do? They come out, take out the London low that supposedly was going to be priced in the New York session, and then they run price higher. And I can only speculate going on a lower time frame because I didn't trade GU, but looking at this day, if I were to break this down on the 15-minute time frame, that same simple Asian session model is probably most likely occurring here. You go back here. See how it takes out the high, then takes out the low, then it runs higher. But look at what happens during the New York session. It takes out a 15-minute swing low in a discount. So let's add up the confluences that we see here. So we're slowly looking at this. You have Sunday's opening price, which is this black dashed line here. Anything above is a premium. Anything below is a discount. And we're going to put that on the chart just so that nobody is forgetting that. So if anybody is joining, and those that are visual learners, and they want to see it and not just hear me say it, anything above that line is a premium. because it's the opening price and it's expensive for the week. Anything below now is a discount. Now the gears start turning. That's one confluence. What's the second confluence that I see here? Intraday. So the actual day that we're trading in has an opening price as well. Now the new daily candle, to not confuse anybody, the new daily candle is formed at 5 p.m. New York Eastern Standard Time every day. Even though, let's say today is Friday, and let's say the market was open tomorrow, and today's still Friday, Saturday's opening price will technically be 5 p.m. But when it comes to the interbank algorithm that ICT teaches by way of IPTA, right, to explain what price action is doing, he says true day opening price actually starts at 12 a.m. opening price. So we're going to use that as another idea. And the same concept applies. And I'll just put this up here, put this here. Anything above midnight opening price is going to be a premium. Anything above this price point here. And that's what MOP stands for. It's the acronym. And then you got SOP, SOP. MOP and SOP. It's funny. But yeah, MOP and SOP. Anything above midnight opening price, premium. Anything below it, discount. Same thing here. It's the same ideology. We'll break it down even further. Because some people, oh, let's go a step further. Okay. What's the opening price for the New York session? 7 a.m. This is 7 a.m. opening price here. It's a down close candle. You can see it opens and closes down. So that's 7 a.m. New York open. The same thing is occurring here. We could even drag this all the way out here so that we could still keep using these arrows as well. Same thing is going on here. See how it's stacked? See how the confluence is here? New York session is in a well discounted range for the day. We can see that it's below midnight opening price, Sunday's opening price, and its own session's opening price. And if you wanted to take a step further and be it's also some people, oh, what about 2 a.m. opening price? Yes, it's below that as well. We can see price comes down, takes out right here in the discount a 15-minute swing low. Now we know the commercials are most likely buying after taking out lows. That's where the buying is occurring. The most ideal buy scenario is after breaking a low. Nobody can tell me any different. It is ideal to you as the trader, whether if you're large spec, commercial spec, retail, small spec, it's always ideal to buy after breaking a low. Why? Because it's cheap. Nobody's breaking after, nobody's really seeking high reward buy setups when price breaks a high. No. Price most likely is going to break a low, and then you're going to see price turn around and go the other way. That's what you're seeing here on the lower time frame, with this 15-minute swing low being rated here. We'll make it blue, and then we'll just call it 15-minute swing low. Now, when price is breaking that, you have an opportunity to go long. How do I know that market is going to most likely go long? Because of all of the confidence of the other layers that I have built up. Premium and discount. The opening prices. That's why I'm confident. Because I've done it multiple times and I've seen it. Back tested it. Seen it. Watched it multiple times. When price comes down and takes out this 15-minute swing low, odds are you're going to see a lower time frame PD array occur here. You're going to see it. And that's just going to be your fingerprint or your footprint to use to find a way to get long. Does that mean the setup is going to be 100% successful? No. Because the setup will fail. There are times where you get an optimal trade entry and it falls right over. Falls right through it. Falls through 62%, 75.5, and then 79%. And it goes right through. And it hits your stop. And then all of a sudden it turns around. That happens. Same thing happens here. You're going to come down here. You're going to buy. Let's say you get the buy on the break. As soon as you buy here, you're aggressive. Buy. And you have like a 30 pip SL. You brought here on that break, 30 pip SL. It may run your whole 30 pip SL. But if you want to take Less risk, you wait for the break on the 15-minute, scale down. Scale down, because the idea is all fractal. Doesn't matter the time frame. The lower the time frame, the less risk you're taking to yourself. That's all you're doing. Look how price comes down. That's that 15-minute swing low there during the New York session. That's the opening price for New York right there. It drops down below it. Gets here at this point. It breaks a 15-minute swing low. After breaking this 15-minute swing low, what can we see here in price? On the 1 minute, right here. What is that? Fair value gap. And we just want to show the price point for this line so we can see if it matches up with the other one. Now, what is a fair value gap? Price just passes up quickly to one side and doesn't offer, and this is a busy for more definition. It's a buy side imbalance, sell side inefficiency. So it's going up with speed. Does it cause a market structure shift? No, it does not. But is it still a footprint or a fingerprint in the marketplace? Yes, there is one here. With the context, it's the context behind it. It's not that I'm picking any random fair value gap or any random PD array. It's the context and the idea that I formed, the storyline. I'm a buyer. Why am I a buyer? Because price broke a 15-minute swing low and we're below 7 a.m.'s opening price, the session, midnight opening price, and Sunday's opening price. Ideal buy scenarios. Golden. That's all you need. Something that's ideal. You're taking a risk trading. That's all you're doing. You're taking a high probability risk that the market is going to move in this direction that you're potentially saying it's going to go. I'm saying it's going to go up after breaking this low. Why? X, Y, and Z. And I just said it previously. That's the fair value gap here. And you can see this low comes in at the exact same point. The next candle literally hits this low. You can see I'm hovering here. For those that don't use TradingView, look up here. See the L? That stands for low. The low of the candle that I'm hovering on. If I come here and hover on this candle's low, the next candle after it makes the fair value gap, look at the price point. It's literally the same price point of the fair value gap. That's your institutional order flow entry drill right there. There it is. ICT's entry drill right there. Fair value gap, go long as soon as it hits it. What happens after it hits that one fair value gap? After it hits right there. Price what does what? Let's speed it up. Pause. Look at how it flies. Look at how it flies. Look at how quick. Look how quick price flies. And one candle. That's a 1 minute candle. Yes, news dropped. Okay, yes. The news dropped here. You had the rate, the inflation rate. And we saw that the U.S. inflation rate was dropping. So that might be signs that the Feds may be lowering their interest rates. And we'll talk about that later because everybody wants, oh, what about the interest rates? We'll talk about that as well. News drops that the inflation rate for the United States is dropping, supposedly, right? Supposedly, inflation is declining. That was taken by the market makers or large investors. Oh, dollar's gonna get weaker because the Feds are gonna drop their rates or pause hikes. And what happens to the foreign currencies? They shoot up. In 1 minute, you get this. Just want to measure how many pips that is. Actually, this one candle, because that is one heck of a candle to catch. That one candle is nearly 52 pips. One candle, 52 pips. But it's not like I was sitting here trying to say, oh, I'm trying to trade the news. No. Look how the news is the catalyst to get the price out of discount and push it back into premium above all these dashed lines. This is midnight opening price, 12 a.m. This is Sunday's opening price, the beginning of the weekly candle. This is 7 a.m. opening price, the beginning of the session. Look at how quickly they push price back up. Quick. With speed. Quickly getting price up there. But it all started with the narrative of how do I become a buyer? How do I become a seller? I just showed you exactly, step by step, what it takes to be a buyer. There it is. 15-minute swing low broken. There's probably some higher time frame trend going on that the foreign currencies are still bullish. Each daily candle keeps reaching up higher and higher. And that's what's going on here. Price takes out the 15-minute swing low. You get that raid on the sell stops. Thank you for that. What is retail probably doing? Shorting this. That's what retail's probably doing. Some people would probably send me a chart like, ah, Deontay, you don't think GU's is bearish? And I would probably say, no, I don't think it. Not saying in this scenario, but if I were, and I told them, oh no, I actually think it's bullish, and then they're questioning me, oh, why do you think it's bullish? No way, it's just dropping. It's just dropping. Price needs to drop in order to rally. Is that not how it works? Price needs to rally in order for it to drop. That's literally how it works. Price breaks a high and then changes trend and starts dropping. Creates a swing high and then creates a swing low and then changes direction every single time. It doesn't get more obvious than that. And this was a great example here of what it means to be a buyer. Now, it may not be as perfect as you want to. But time and time again, as you study it, you'll see that these patterns repeat over and over and over again. And there it is. Got that full intraday. Asian session high rated. Buy stops taken out right here during London. All these clean highs. Look how it runs up, takes out the clean highs. After taking out all this buy side, it breaks all the way down. And where does it break down? Relatively equal lows. Asian session low. They take out these lows, runs lower. New York session finally gets a trade set up, and it goes long. You may not catch it here. You may take a loser here, but you may take a nice winner here. Happens. Or you may just take a loser in both, and you move on. That's life as a trader. But you want to get good at it consistently. You want to find something that you can find consistently in the market. Not something that you have to keep trying to chase every single day. No, I want something that's going to get the job done. You know? I want to make it as easy as possible for myself. I'm not here trying to speculate a new model every 2 days, and then I'm trying to implement the new model. I don't even know the model. I haven't even back tested it for more than 6 months. Why am I using the model? You haven't used a trading model for more than 6 months, but some reason you're using a model live because some guru or someone with more experience told you that this model works. No, test it out for yourself. Everything I say you should take with a grain of salt and actually go back and study it and then come back and be like, yo, Deontay, yo, you're so right. Yo, that phenomenon actually repeats every day. And I found a setup taking exactly what you said. And I'm just passing on the knowledge. It's not that I've learned this because of someone else. No, I've learned it, yes, through ICT or through other greats like Larry Williams. And not like they personally mentored me one-on-one. Like, and I sat with them in a library or something. But, like, the information's out there. You just got to slowly conceptualize it for yourself and make it digestible. You don't need everything. You don't need everything. And I just showed you one simple idea. New York session. Wait, if you want to buy, wait for a 15-minute swing low to be broken, find a fair value gap, buy it. And then grab 20, 30 pips. Here you would have grabbed a whole lot. And the news would have been on your side that day. And you would have been smiling cheek to cheek. And even let's say you took the loser. Hey, you risk properly, you risk 1%, you can sleep at night. It's the fact that people are risking too much. That's why they're being so stressed out. They're risking too much. And they're blowing the account in 3 days, 2 days. You just funded the account and it's all gone. But the trader that's risking 1%, they're still happy every night and content with their trading account. Because they can preserve their equity long term. You're trying to trade long term. Because what happens? All right, let's say you make millions tomorrow. What? I know your lifestyle's probably going to change. You're probably going to move. Probably going to buy a bigger house or something. Fancy your car. So who's going to make the money keep coming in consistently? Or you're just a one-shot trick pony. You just catch one. You catch one mega trade in your life. Yeah, it could set you up for life. Some mega trades will set you up for life. But you got to find something consistent. And as I progress and as I get older as a person and as a trader, man, it's simplicity that beats everything. Simplicity beats everything. I'm not sitting here putting on indicators. I don't care about that stuff. Now we'll check the chat and then we'll just move on to Purge and Revert. I want to touch on we're gonna jump right into that. We're gonna jump right into that. Oh, what did I just do? Is it still recording? We still sharing? Alright, we're good. Alright. So we're gonna jump right into the Purge and Revert. I think I have it on the weekly view. We're showing it between dollar and AU. So you can see the most two current things that I'm looking at. I have this all set up. Like I try to be as organized as possible. So I have at the bottom, I have all the stocks that I'm looking at: S&P, Microsoft, Google, Apple, the big dogs in the market: Tesla, Meta, Nvidia, the minis as well. U.S. oil shouldn't be down here, but I try to keep it unified. These stocks that I'm looking at, try to keep myself organized. Then I got the futures, right? I got euro, yen, pound, CAD, Swissy. I'm just organized. Keep myself organized. Then what do I have here? I have the U.S. bonds, right? Got the 2-year yield bond, 10, 5, 30. Then I have my foreign currencies, or my majors. And then I have all my yen crosses. Try to stay as organized as possible. Then I have at the top the most important things that I'm looking at: AU and DXY. That's all I need, really. Everything else is just inter-market analysis. And the only reason I'm looking at AU is because you guys wanted me to talk about AU. Going into Purge and Revert. So this week, you can see this is a swing high formation. Now, when I show it on the hourly, it's going to look completely different. But it's the same thing that you're seeing here. It's a swing high formation. 1, 2, 3. Now, this swing high formation is forming after breaking a swing low. That swing low is over here. 1, 2, 3. That's the swing low. So after breaking this swing low, we get a lower swing high. So I already know that market makers are most likely going to sell. That's the simplest way to find bias. If I had to teach anybody with no knowledge of Forex or no knowledge of trading, your swing highs and swing lows will easily tell you where markets are going. That's it. On the 1 hour, when I sent the screenshot, I said, okay, I think we have a purge and revert, and I think dollar's going to go lower. Somewhere, I think it was this day here. Around this day. I was like, I think at this point, dollar's just going to keep going lower. Market makers want this to keep going lower. Where is the purge and revert occurring, Deontay? Okay, let's talk about it. Let's come here. At this point, where price is, where the candles, ignore the annotations right now. I'll take this off, actually. Price comes up and takes out what? A previous daily high. Price comes out and takes out a previous daily high. It's Friday's high. Right here. Friday's high. It's right there. Price comes up, shoots right through it. Now, after seeing that, and it's a Monday too. And I like to avoid the Mondays. Price comes up and takes that high out. Now, at this point, what would you tell yourself? Oh, it's price long? Potentially. But where is it relative to Sunday's opening price? We already know where it is. We know it's where? Above Sunday's opening price. So now we're just going to cross-reference this so we can understand the thought process here. That's that swing high here. It's the same chart that I'm showing you, just a different chart markup in different lens. That's Sunday's opening price. That's that run up above Friday's high. Would you be looking for buys? No. It's probably most likely not ideal. To convince somebody to buy above this price point, price would have to try a lot harder to convince you to buy above here. Or convince me personally as a trader to buy above here. I'm most likely thinking sell. That's where I'm leaning. Now, it could still buy, but I'm saying odds are I'm most likely thinking sell. At that point, we run up, and what do? We're purging one side. That's why I have the money sign here. We're purging this previous daily high right there. Price comes up, purges that high. Now, at that point, I'm thinking to myself, what could happen tomorrow? Is it going to keep running this high that it's going to form on Monday, Tuesday? Meaning, like, if Tuesday were to form, would it run that high? And if it does, then I would suspect probably Wednesday would go higher. But if it doesn't run Monday's high, and instead Tuesday runs Monday's low, we just took out buy side, then we ran to sell side. There's a break going on here. They're changing where the market is going. Because in a trending environment, I want you to think about this. In a trending environment, meaning it's going in one direction, up or down, buyer or seller, In a trending environment, what do you normally see with the previous daily highs or the previous daily lows? They keep getting broken. It just keeps going in that one direction, over and over and over and over again. If we were to come here, let's say we just took the DXY and we went on the daily chart. In the month of March, when we did the daily updates in March, and we were comparing GU and DXY, right? And we saw DXY completely melt in March, and we saw GU completely rise up. What did we see at one point in time in the market? Just lows getting swept, not highs. Yes, at one point in time there is going to be a high being broken, but that's the whole start of it. That's the breakdown. Because like I said, the commercials are most likely going to sell after what? Breaking a high. That's the key point. They're breaking a high, then to sell. They're breaking a low, then to buy. That's all it is. Constantly. Now, yes, we could sit here and say, oh, what about the 4 phases of the market, Deontay? Consolidation, reversal, expansion, retracement. Yeah, we could talk about that. But if I was explaining this naked to anybody, I would say, yo, you see the market going down? What does it keep doing normally? If you had to break it down and like show me like step by step, you're going to find that the lows keep getting taken out, not the highs. The highs are protected in a downtrend. They protect the buy stops, but they raid the sell stops. Look at this. Sell, low, another low. That's funky. Another low, right? Another low here. But what do they do at one point in time sometimes? What do? What do? They throw people off. They break highs. Look how it breaks. This candle breaks this high. Breaks this high. And after breaking those highs, what happens? They sell again. That's what they're doing constantly. Over and over and over again. And that's exactly what you see in a trending environment. So, looking at this, if you think that this market is breaking highs to keep going higher, shouldn't price the next day, let's take this as the daily candle, shouldn't price the next day do that and take out this high? If it's bullish, if it's trending in one direction, should it not take out the high and keep going? Yeah. That's what we would come to a conclusion. We would say, I speculate that it's going to go higher because it keeps taking out previous daily highs. So Tuesday should be taking out previous daily high. Instead, I just want to make sure this is back to its original form. Instead, what happens? The market changes. And get that candle. It's the next day. Bang. Right? It does touch it. But it broke it. Yeah, some people, but there's no body that closed below the low. Who cares? It touched it. The actual price point, either it's a pip or half pipette below it. It broke the line. Some people, I need a strong close. I need a strong, large candle that closes below here. No, you do not. No, you do not. Price now finally falls through it. This could be the strong stance that quote-unquote people want to look for. Finally. So be it. Some people have their own filter. At this point now, once price breaks this high first, and then breaks down the low the following day. So it doesn't happen here on this day, because you can see it's an inside bar candle. Larry Williams says in his book, there are 2 candles that trick retail traders. Inside bars and outside bars. This day here, Tuesday, it's inside the range of Monday. Now, what do I mean by that? And I want to delete this. Yeah, but we'll bring it over here. Just looking at the Dow Jones. Checking out for a homie. He had asked me. Shout out to Aaron. Look at this bar. So I'm not losing you guys here. This is an inside bar. Why is this called the inside bar? Because the candle is physically inside the previous candle's high and low. Look at the candle. It's inside this candle's range. That tricks people psychologically. I want you to know that. It literally does. Because when people see this, they go, what? What is this? What did the market makers give us? Because look at the trend. What does it look like? Looks bullish. Keeps breaking highs, 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 highs. And then this day it doesn't do anything. Doesn't break a high or low. They do that on purpose. This is a psychological game. Believe it or not, even if it's not intended purposely, it is a psychological warfare going on with many traders. Retail traders are stuck in a paradigm every day, especially when these days come up. An inside bar like this, when the candle's inside, everybody loses everything. Their mind just goes up. I don't even know what the market's doing anymore. What do you normally do when you get days like this? The next day, just leave it alone. That's my case scenario. See what happens the next day. And you'll see the next day what happens. What happens the next day? The low is broken. There you go. You got your insight. Clearly something happened here in the marketplace for the market to say we're going in an uptrend, and then all of a sudden we're not breaking highs anymore, we're breaking lows after breaking highs. They clearly sold. They sold. And we'll get into IPTA as well and daily bias, because I really want to send this one home. I want to drive this one home with bias, because after today, and even after the video I posted, there should be no reason why people can't find bias in the marketplace, whether that's on the daily or the weekly time frame. You can use either or. I would prefer people to use the daily because it's more concise and more accurate. But if you use the weekly, you could probably catch bigger setups. But what does bigger setups reside on? Either bigger equity or controlling your risk and a larger stop loss. You want to trade on higher time frames, you're going to have to take more risk. That's just how it goes. Price then does this on this day here. So we start counting back. Now, why are we using 3 days? Because we know the market is coded and it needs to go off of something previously in time. It needs to use some day. Same thing with IPTA. It's no different with when ICT told people, start of the month, look back 20, 40, 60, or use the current day, then look back 20, 40, 60. It's the same idea. If they coded it, the people that scripted the market, they had to use some type of coordinates, X and Y. Something needs to align, time and price. Clearly, it's time and price. But it needs something to pin itself on and say, this level 20 days ago or 40 days or this level, quote unquote, an average 20 days back is what I'm going to use to then project future price action. It's not using a day, 500. It's not using 5 weeks ago. No, it's not doing that. Most likely it's using the most recent data that it has in time. It's not using 3 years ago. It's not doing that. Especially on a day-to-day basis. It's not using 3 years ago data. It's using the most recent price action that we have to then say, what's going to happen in the next 20 days. And this is what I've been showing every month so far. What's happening in the next 20 days based on what's this here. What's going on with this to understand what's going on here. I may not see anything. I may not get the results I may want here. Right? It may go against the original stance that I had at the beginning of the month. But if you follow the daily bias, you'll see how easy it is to get back on trend with the market. It's like so easy. After this point, I'm just looking to be a seller. Because I know the market has shifted or has broken back down to selling. Because something's not right. Why are you not taking out previous daily highs? You'll see here. This is the previous daily high here. Made it green. Huh. Daily high here. I know this Tuesday. Even old daily high here. It just keeps taking out highs. Taking out highs. Let's see. We got a Monday high somewhere around here. No, Monday's high does not get taken out because that's the higher swing high. And we'll see how you'll see how this swing high plays a role with this swing high. This one's lower than that swing high. You'll see how it plays a role in trend. Market keeps taking out previous daily highs constantly, but all of a sudden here, it doesn't. There may be something changing here. And what do? I look back 3 days, or I look back to any other days, or look at the range that I currently have, high to low, if it hasn't gotten back there yet. So at this point, when price breaks that low, I would look for a range. I would take out a fib tool. I would measure high to low, and I'll find the equilibrium of that range. And if price at any point in time, right, comes back into this range, I will look for a short setup. I'm going to find some type of sell scenario in this range here. Now, it may not be perfectly in this range, or it may just get just about to 50% and then into a premium and then sell. But that's the ideal sell scenario if I see price pull back up into this range. Just gotta sneeze. Bless me. Whew. And that's how I would use purge and revert. That's simply what I'm doing. At that point, purge is here. This is the purge here. This is the revert back to sell side. We're going with sell side then. And we want to see it continue the breakdown in some shape or form. And that's what you saw with this. It's exactly what you saw here. Price keep breaking down and changing trend. And you see it pulling back up. What are they pulling price back up to do? Probably take out clean highs. Look at all these highs that they engineered. What are they running back into? That SIBI right here. See that SIBI that was here on the chart? I don't have it here. But if we play it forward, you'll see Friday's where? Below Sunday's opening price. What are we also doing? Taking out previous daily lows. So we're taking out sell side. We finally get that run on that level. This is that 60-day. I think this is the 60-day look back low. If I'm using IPTA correctly. Yes, it is. So once again, these levels are not just random that I'm picking. It's not random. They're strategic. And there's some data behind it. 60-day low, ran. Why? Because if it was random, why would it just pick this low and then give a reaction like that on that low? Because if it was random, shouldn't it have not been this low? Shouldn't it have been this low instead? Shouldn't it have been these lows instead? But why did price perfectly stop one day on Thursday, then the next day it opens, breaks it, and then runs higher? But everyone claims that they don't understand IPTA. And I just showed it for 3 months in a row, 4 months in a row, 3 years in a row. And we'll keep doing it. We'll keep doing it until people consciously make the decision and be like, wow, that's how simply I could use IPTA. Yeah. That right there in itself could have been a model of yours. Break the 60-day low, buy. Same thing, vice versa. Let's say GU. I don't have GU marked up. I know I don't. AU, for instance, because I was like, oh, man, D, you've seen this year after year. You've seen this quick rate of return setup happen over and over again. This is the 20-day look back period from April 3rd. This is the 20-day high here. Look what happens when price breaks that high. As soon as it breaks that high, look what happens. Look how price breaks all the way down after taking out that high. That's another model. Break the 20-day high, go short. Where did it also go in? Confluence. Where did it also run into? The weekly SIBI. Look how price comes back into it. And look how we're returning back into it. So it looks like we still want to go here. Still probably want to keep going higher for some reason. Why are we coming back into the SIBI again? It's a higher time frame PD array. We should hit it, show signs of respect, and get out of there. We're coming back into it once again. It's not like it's a 15-minute fair value gap or a 1-minute fair value gap and it's hitting it 6 times, 8 times. No, it's the weekly fair value gap, and it took its time to want to run all the way back up into the weekly SIBI. Odds are it may fail and it fall through. And what would it do? It would fail through and then use this as some type of classic retail support and then go higher. And then there might be some other theories here on the lower time frame. 4 hour. There may be other PD arrays on the other time frames that you may look at as a trader that is unique to your eyes. You can't sit here and be like everybody else. You have to stand out. You have to find what works for you. And I've been showing exactly what works for me. In the most simplest form. That's the key part for me. I like to show simplicity. I don't want to make any idea complex when explaining it to anybody. I want to be very straightforward. And that's how I was able to see this short. And then vice versa. If dollar was going to go short, what did I suspect AU to do? Most likely get stronger. And that's exactly what AU did. And I think I still have it on the chart. There we go. You see this? Look at the range. Day one, right? Look how right here, it breaks this candle's high. Not the money sign here. This candle's high here is broken by this day here. It looks like it broke here. It did not. Highs here is 799, unless that is the day. Yeah, technically it's this day. So I should have shifted. Look, see? Even I make mistakes. So this should be shifted over. Instead, this should be day 1, day 2, day 3. So I'm going to fix it right now. So this is the day where the break occurs, right? The market break. So the day that the market break occurs, that's when you count 1, 2, 3. The day of. So now I would just shift all these days over 1. 1, 2, 3. And this is the day the market break is occurring. This day here. Because it takes out sell side. Like I said, look at how the market constantly keeps taking out not swing lows. It is swing lows on a lower time frame. But previous daily lows. Low, low. Takes out that low. Price comes out, takes out this low. But then all of a sudden on this day, doesn't take out the low. They're breaking the trend. Especially if you know what the higher time frame is doing. There is some type of market break here. That doesn't mean this scenario, when it does the market break, doesn't mean now, yes, we just buy. Because the market could easily do this and humble you. And easily humble you. Come down and sell. But it's a formula. It's a systematic recipe. You're not going in here randomly going, oh, buy. Oh, sell. No. Check 1. Okay, we broke a swing high. Step 2. Okay, we got a higher swing low. Step 3. We broke the third candle high in that swing low. And then we look for longs in New York and London. There goes your filters. It's ABC done. But it's not that retail ABC logic or triangle harmonic pattern. No, it's not that. It's logic here. I want everybody to understand it's logic, man. It's common sense. At this point now, it checks the model out. For this model at least. It checks off. What do I do at this point? I break the range in half. High to low. Whatever range I have current to the market break that I have. That price is trading into. Take the high, low. Cut it in half. That's the fair value. That's that black dashed line here. Any of days moving forward after the market break, if it's below 50% of the range, I could probably get a high probability buy scenario to fair value. Because we know it's most likely going to run into fair value or more. But we know definitely if it's going to go higher, fair value of this range, high to low, is going to get covered. What happens the next day? The exact next day. What happens? You get a London low buy scenario around 3 a.m. You can see right here, 3 a.m. makes a swing low. And price does what? Runs higher. We'll put on the session indicator so we can see that. Look at that. And what's happening here as well? Breakout traders buy the Asian session high. They come down. They got stopped because most likely they probably have their stop loss below a swing low or clean lows, where most people would ideally or reasonably put their stop loss below a low if you're buying. What happens? Price comes up, and now you can already tell, like at this point here, you can tell the retail traders are probably scratching their heads, wondering what's going on. Shouldn't it be running higher? Yes, it should be, but it's not the ideal buy spot. It's not ideal to buy above the Asian session high. Since when was it ever ideal to buy above the Asian session high? No, it wasn't. It was always ideal to buy below the Asian session low. which would mean if it's below the Asian session low, it's below midnight opening price as well for the day. And then most likely you go into your session. Is it below 2 a.m. opening price? And we know it is. Because if you play price out, you can see at one point in time, that's 2 a.m. opening price. It drops below the 2 a.m. opening price. More confluence for you to buy. All because of this idea. It's a context. Now I'm going to look to be a buyer. What am I going to aim for? Fair value? Or, if it's not fair value, what I'm going to aim for? Previous daily high. Look at how I drag this high out all the way. This candle here, or this daily candle here on day 3. I'm using a day that hasn't been broken yet. You can see how I'm using this specific day here. You could also use day 2. You could day 2. Day 2's high isn't broken yet. The next day after the market break. Man, that's a lot of buy-side liquidity for the market makers to easily run. If I was a market maker, I would buy, for sure. I'm cheap from my range, high to low. It's very cheap. I probably convince all the sheep, all the people around the world that Australian dollar is going to go lower. Why not buy it back now? Yeah, I'm going to buy it back. And where I'm going to buy it back to, previous daily high here, here, and even here. And even potentially up here. So these are all obviously higher projected highs. But the most closest one to fair value, you can see here, that hasn't been broken after the market break, is there. For DXY, you can see the market break already took out. If we were to look at it. The day of the market break here, right? Price comes down here, market break. It just runs right through. Day 3. But if it runs through day 3, do you still have other days that you can probably utilize? Yes, you can. What are the other days? Right here. Let's say you went back. You're looking back more. Let's say 4 days. Let's say you added a 4th day. What happens there? You had some type of sell scenario to go here. Where is this sell scenario occurring? New York. New York session here. Right after probably news embargo lift or CME open. Boom. Price drops. Quick. Takes out the previous daily low here. Next day, what does it do? It does the same thing. It takes out the previous daily low here, and then takes out this old low as well. And then it gets back to an old low. And if the 60-day low here hit, buy. Just like that. And that's what happened with AU. I think AU is a more suited version to teach somebody because you can see the ideal buy scenario after the break because DXY already took out the sell side. Here, you can see after the market break, you still have these days that you're looking back at to see if they can target. You can see day 2 and day 3 ran. And it was ran with speed too. Right back to where? Fair value. But look at the reaction point. What happens when price hits fair value? Again, this market can't be random. It's got to be coded. Because why did it hit from this range high to low? Why did it specifically hit that, then stall off, and then fall back down? And then why consolidate below it and a discount again? See how the blue shaded area is discount? Look at how it's consolidating inside that range. Waiting, reaccumulating orders, once again, cheap. And what did they do? Push it up, quick, market shift, breaking a swing high with a fair value gap. Price trades back down into that 1 hour fair value gap. What happens again the next day? Thursday, London low, buy scenario. Once again, it's below fair value. Where's the buy occurring? In the blue zone for London. And look how it runs all the way back up to these previous daily highs. Every single one. Now, hopefully that answers your question about the Purge and revert. It's not too complex when you think about it. Don't overthink it. You're waiting for one side to be broken, then the following day it breaks it. It may not be the next exact day. Like this day, it didn't have to be the market break here. It could be the following day. It could be this day that does the market break. Then you start counting back 1, 2, 3 days. Then you try to speculate. Do we have a range? Is it ideal? Is it worth our while to get into a long position? Risk to reward ratio. Is it worth it? Yes, it's definitely well worth it. Definitely could get a 3-to-1 here. Definitely could get a 1-to-1 scenario here. Risk $1 to lose $1. Risk 20 pips to gain 20 pips. You definitely could have found something here on this day based on the Purge and revert model. Love this model. It's probably my 3rd favorite intraday model. Very simple to follow. and quick to pick up, especially if you don't know much. It's easy and to find consistency in the marketplace. So hopefully that answers that person's question. Would you say the purge and revert is showing what happens after the counter trend candles? That's why. Yes, that's another confluence. Every day, yes, Aaron, it won't stop. It won't stop. And yes, Kimberly, I believe the counter trend candles could be what's occurring on the purge and revert. I would have to do more back testing to actually prove that and say that, but I would not put that out of reasonable doubt at all. I would assume that that's what's occurring here as well. Let's see. Wanted to jump on to now bias. And after this, we're going to talk about any pair. Any pair you want to look at. I don't care what it is. We can be looking at the futures. Just call it out. I know that some people said it in the Telegram channel. Call it out. We'll look at it. And we'll break it down. And we'll go through all the macros together. I may not come down to a conclusion, but I wanted to show you the thought process behind how Deontay is probably thinking about the market. Not to say my thought process is the best or the end all, but I think it's definitely a standpoint that people should be exposed to. Be like, yo, I need to think about this market just a little different to comprehend it. And maybe it's not as hard as I'm making it to be. So, jump right into this. Now, somebody wanted to look at the yen crosses, and I was about to do this whole breakdown for them, and I will, because I know people want to look at like AJ, EJ, GJ, and stuff like that, and I have all of them compared together. All the yen crosses here. Look at how they're all moving almost in tandem. Some may be behind, lagging, some may be in front of it, but overall, just looking at the price action, looking at the chart, you could already tell it's bullish. Like it takes me 2 seconds to look at this chart and be like, yeah, it's bullish. Why? Because the swing high was broken, and I see a higher swing low. Look at UJ. UJ is a prime example here. Let me just jump right into daily bias here. After this, should be no confusion to find daily bias. Like I would hope so. And if there still is, I'll definitely walk you through each step. And we'll even do it live. That's what I do the daily updates to show this. To be like, yo, you can find the trend too. I'm not anyone special. I'm not no genius. Remove all the indicators. Overall, the thought process is this. Swing high broken equals bullish momentum. Right? Quick and easy. That's the most easiest way for me to think about finding trend. Once I figure that out, I'm golden. That's it. That's the number. That's the key. I want you guys to know this is the key here. This is the key. Now, this is one scenario. There's another scenario, but I'm going to walk you through this scenario. But walking through this scenario, you'll see, okay, you're either going to find yourself in a false break or you're going to be catching the trend. There's either one. It can't be a third option. You know, we might get stuck in some reaccumulation, but eventually you're gonna get either one. You're either gonna get caught in a false break. Think about this. You're either gonna get caught in a false break or you're going to catch the trend. There's either it's only one side of the coin that you're gonna land on. Heads or tails. You're either getting falsely pulled to the wrong side or you actually got the trend right. And if you got pulled to the wrong side, what should you do? Change your bias. Change your bias. That's it. So for example, looking at this chart, what happens to price action as it's going higher? It's breaking swing highs. And as it's breaking swing highs, what's also occurring after breaking swing highs? Higher swing lows. The easiest way to find bias in the marketplace. Do not worry about the data here. Let's say we're starting here. Because either way, if you start following the pattern like this every day, moving forward, and you track it this way, and you log it every day like this, yes, you're going to be times where you're going to get the bias wrong. And there's going to be times where you get caught in a false break. It happens to me too. But when you follow this, and there's other ways to figure out if it's going to be a false break. But when you follow this simple pattern of swing high, swing low, no excuse to find bias. Tell everybody that you know how to find bias. And they're going to doubt you though. But then you show them this, and you're gonna like, oh, you really know how to predict the market. Not 100% accurate, but definitely well over 60% of the time. Swing high here. Let's see what happens to price. Price breaks it. What does Deontay instantly do? Instantly, wrong thing. Not you, Siri. I know what it's doing. I'll just leave it as this. Doesn't do it for me. Doesn't do it for me. Instantly, I'm on alert. I'm like, wait, swing high broken? That must be bullish momentum coming into play. Now, I could be totally wrong. But this is the step to finding the bias. This is step 1. Swing high broken. Okay. What do I need to form next after a swing high broken? I need to see a higher swing low. It is that simple. After this higher swing low, odds are you might have found the trend. And you can probably well enough assure yourself and tell all your friends that you know where price is going for the next couple days, probably. Maybe the next 4 days, maybe even for next week, maybe the next 2 months, because this could be the turning point that you're finding. Swing high broken. Now we just need a higher swing low compared to the relative swing low that we recently have in price. Where's the most recent swing low that we have? We have this one here. So let's say we're going with this one. We could even go with this one as well. There's one here, 1, 2, 3. But we're just going to mark out 1 to keep the chart clean. That's a swing low. Top right is fine. Now we just need one to form higher than this one. 1, 2, 3. Now some people will argue and say, well, isn't this one here 1 after the break? Yeah, it is, technically. This is a more advanced one. 1, 2, 3. You could already be looking to be a buyer. But let's say you didn't see this swing low, this higher swing low as the new buy opportunity, and you're waiting for one that's more obvious for you to see. Play it forward. What is this here? There is a higher low on the left, a higher low on the right. That makes this candle the swing low. But in order for it to be the swing low, it needs its 2 buddies. It needs a buddy on the left and a buddy on the right. That's the only way you get a swing low. You don't need 6 buddies on the left. You don't need 6 buddies on the right. It only takes 3 days. These market makers are making money quickly and turning the market in 3 days. It's a 3-bar pattern. No matter what time frame you're looking at it. It's a weekly, monthly, or yearly 3-bar pattern. Even on a 15-minute time frame, 1 minute, 2 minute, 3 minute. It's turning in a 3-bar pattern. And some people may not believe me, but it's always that. It's always a fractal idea. For instance, it's easier to show the examples. For instance, before price took off here to go up here, right? To get all the way up here, what did it do at one point in time? Same idea. What did it do? It broke some type of swing high. We'll clear all this because I don't need this anymore. It broke some type of swing high. Let's say it was this one. 1, 2, 3. Let's say it was this one here. You have many available to you here. Price broke a swing high. After breaking that swing high, what does it do? It forms a higher swing low. There it is. 1, 2, 3. That's on the hourly. 3-bar pattern on the 1 hour. What happens after that 3-bar pattern? Swing low? A higher swing low? Price keeps running higher. Is there a lower swing low compared to it? Yes, there's one here. And there's one. Is this one here? The low is... Nope, that is not one because this low is not lower than this one here. It looks like it. But this one here, that's a swing low. Market makers are buying. Look at the higher swing lows coming in after breaking the swing highs. Got the insights, yes. People, oh, what about the market structure shift and fair value gap and then, oh, right here. Yeah. But where's the market making the turning point? Inside the fair value gap. With how many bars? 3 bars. It's always been this way. Every day, every week. It doesn't stop. Just like Aaron said in the chat. Doesn't stop. It's the same fractal idea. Just showing it on the hourly. Show it on the daily chart. It's more powerful. It's definitely more powerful. Less risk here, but more powerful for you to find setups long term. So you can know what days you should be buying. And sometimes you just turn into a buying feast, you know? A buying buffet. You just keep buying each day. And it's just easy for you. You just see market taking out buy side, buy side, buy side, buy side, buy side, buy side. Yes, there's going to be a day you get stopped out. But if the market is continue trending, keep searching for your buys. Higher swing low forms here. Now at this point, what's the most crucial point here? The third bar in the formation. The third bar. I'm not saying third day, the third bar. Get this at the bottom. 1, 2, 3. Now break it back. Right here. That's your third bar in the swing low formation. The last one. Right here. It's the buddy on the right that has a higher low. Right here. This candle's high is essentially going to be the trigger point or the idea for you to be like, yes, this is a confirmed market structure shift. Price is going to keep going higher. They are turning the market. They're turning the corner at this point. The third bar, that high here. If you see this candle's high broken, now it doesn't have to be the next day, because the next day, because some people ask this question too. They say, what if it doesn't happen the next day? Doesn't matter what day it happens. Let's say it happens, doesn't happen here either, and it happens on the next third day, 3 days from it. It happens here. Let's say it does it here. That's when you start hunting longs. After this day, because it broke the high, now you're going to hunt longs. But coming across to it, I mean, look at it, you can see price breaks the high here with this candle. This candle's high, you now have a high probability raid on buy side liquidity. Because what did you catch? You caught the commercials retracement, or you caught the commercials repositioning to go long, while retail traders saw this as the end of the world. You did not. You saw this as price structure moving higher. That's all you saw that as. Once this candle is broken, this candle becomes a high probability raid. So we'll put a target on it. We're going to say that this candle, we want to see some type of buy setup run up into this candle. That's what we want to see here the next day. What happens the next day? Rocket ship. What other confluence do we have here as well? Simple idea, Larry Williams teaches, small range to large range. We were due for a large candle some point in time. We know that. The market's not going to sit here and consolidate for the next 3 years, the next 2 weeks. Along those weeks, not every single day is going to be tiny. There's going to be a day where it's going to be large, and it's going to shoot straight up like that. Small, small, large. After this large candle, we could probably suspect we may not get another large candle like this. We may not. You may. But odds are you would not. That's my filter. I'm going to say, hey, tomorrow we may not get a large candle. Odds are we get a small one. And I probably would hunt smaller setups. I'm not going to look for big setups. The market may stall on me at this point. So I could go in. Now, at this point, retail traders are doing what? Probably chasing. They're like, dang, UJ's bullish. And they may get it right the next day. But there's sometimes they get burned really bad because the next day does what? Pulls back. Pulls back hard. And that sucks. Look at that. The next day, nothing. They got everybody excited. In one day. What happens the next day? So anticlimactic. Right? This was climatic. This here. You missed this. Because if you're looking at the chart and you're like, wow, that means you probably missed it. The people that caught it are grinning cheek to cheek, and they're probably telling their friends or whatever, or boasting, whatever the case may be. Or they're making their withdrawals and paying their bills. The people that missed this are saying, dang, what the heck? UJ just shot up. Dang, tomorrow I'm going to buy. And I'm going to buy heavy. I'm going to bet even heavier than ever. And that's how they get everybody. What happens the next day? You bet the farm. You bet your whole entire account just to get nothing. Just to get nothing. You see that? I don't want this. risking small after large range candles. Now after this small candle, what can we expect? Large again. Large. It's a psychological game, guys. That's all it is. We get a down closed candle. You may not get the price right. Down closed candle. But what is still ultimately going on? What happened here? The same thing repeats again. We broke another swing high. We just need a higher swing low. What are we going to wait for? Delete all this. We're going to wait for a higher swing low to form. Something higher than this one here. 1, 2, 3. These are just probably counter trend candles because the market is trending up now. 1, 2, 3. Swing low confirmed. What confirms this swing low? The middle candle's high is broken. That's what's confirming it. Because what's happening here? Think about it. Sell side's being broken with this candle here, but then the next day buy side's broken. Purge, revert. You see that? Look at the purge on the sell side. Look at the next day. Look at the revert. That's your swing low. That's your swing low. So if you see that, then you automatically go, oh, count back 3 days. 1, 2, 3. These are the 3 days right here that have buy side available to me. Well, this one, technically, the second day, because it's the only high that's not broken. Right there. And then even higher. If you're going to suspect it to go higher, what do you have here? Swing high, fair value gap, fair or shorter block. You have those available to you. And you'll see price probably is going to go higher. You wait for the third candle to be broken. Is that where we are in price now? Yeah, that's where we are in price. Wow. Ha! And I basically told you where I most likely would suspect UJ would go now. Bullish. Now, I could take this same concept and look at another pair. Now, I know somebody wanted me to look at AJ. Now, after this, no excuse to find bias. Like, no excuse. Actually, no, I want to keep that. Take this off. Look at what happens here. What happens? Price comes all the way back up to this swing high. Had to be important. Had to be. Now, when you take this model and you inverse it, when price breaks a swing low, it tells you what? Go for shorts or think bearish momentum is coming in. Now, just to look at the UJ example, because I skipped over something. Because some people go, oh, but what about this? Let's delete. Like I said earlier, you're only going to be two sides of the coin that you're going to land on as a trader. You're either going to make profit or you're going to be one getting taken advantage of. You're going to be the ones that get caught in those fake breakouts. You can see here clearly, at one point in time, this was a fake breakout. That's what we saw with DXY, and then that's what we saw inversely with GU. It dropped down in March, and then it ran higher. That's the false break. But like I said, if you're following the idea, break a swing high, what should happen after breaking this swing high? After breaking this swing high here, what should have happened if it was supposed to continue going bullish? A higher swing low. Instead, you get trapped. It's a false break on you. They run the buy side, purge, revert. You can see how they look how the purge and revert is simply a swing high, swing low. Just want you guys to know it. Like in simple terms, it's a swing high, swing low. Purge and revert is a swing high, swing low. Look how this middle candle, see this middle candle, that's the actual swing high, takes out the previous daily high here. Then the candle on the right side of it takes out the sell side instead of taking out the buy side. There goes your purge and revert in a couple sentences. It's a swing high, swing low. We should see a higher swing low form here, which is compared to this one, or even the one down here. But we don't get that. We get a false break. So we get caught on the wrong side. Oh well. Take it on the chin, move on. But now, if you know that this is the false break, and you were expecting higher prices, shouldn't you change your bias? Or shouldn't you step to the sidelines if you got caught with a false break? Yeah. Especially, and you know it's a false, and how do I know it's a false break? Because price breaks a swing high, then breaks a swing low. That's what's happening here. We break a swing high, and after breaking that swing high, we get the purge and revert. And it's this swing low that is broken that tells me, ah, dang, I got caught on the wrong side. Right here. Boom, boom. Now, that doesn't mean they can fake you out twice. I'm not saying that doesn't happen, because it does happen. Price can come down, come up, come down again, run back up again. And it's clearly another ICT buy model scenario here that I'm showing here. You got to do your due diligence. I'm going to just give it to you that easy. But that's another scenario there. That's a daily idea. And you'll see that time and time again on the lower time frames as well. Just on the daily chart, because it's easier to conceptualize where the market is going and how now you can go in intraday and find the setups. You can't just jump in intraday and find setups unless you're using a no bias model, which we know a few of. After price takes out this swing low here, I know I've been trapped. They trapped retail traders long above here. And now they're pulling it back down below a swing low. What happens here? The same thing inverse to the model that I'm telling you. Same thing. Let's say you got it wrong, but you see this. Mitigate your losses, get back on track. But now, at this point, you know you got caught in a false break. Secondly, finding daily bias. What happens when a swing low is broken? That's bearish momentum. What do you need to form? A lower swing high. So at this point, Deontay's doing what? Deontay's on high alert again. You don't have to trade every day. You gotta wait for these to formulate. Let the food cook a bit and see what's going on, and then you go in, and then you see, make sure it's really cooked, and then you go in and eat. That's what I'm doing every time. And that's NFP week. You don't see a lick of trades from me, really. NFP week, I don't send anything to the channel. What happens next week? I said next week, watch me start sending more charts. Because I know that entire week, there's no point for me to trade. I could just relax, put my feet up, chill with my partner, chill with my family, do other things I got to do outside of Forex, live my life. I can put my feet up and chill. Swing low broken. What do I need to form? A lower swing high relative to the swing high that we recently formed. This is the swing high. So you're not going to get that. You're not going to get that that sell again. Unless price comes back in here and acts like a rejection block. Price comes back up into this close to high. Comes up, you possibly have another opportunity to go short. That happens. That's another PDA rate. Boom, you go short. But odds are you may not get that. Less favorable PDA rate. But what are you waiting for? A lower swing high. What is that right there? 1, 2, 3. That's a lower swing high formation that you got right there. That simple. Lower swing high. Why is this a lower swing high? Because there's a higher low on the left and a higher low on the right. It only takes one candle on one side. That's it. Same thing is occurring here once again. Price is breaking down. What do I look for? I would look for the third. Look at the third candle. Look how price ran to fill this in too. See this wick? All of this. Look how the next day price comes to fill that back in. But look at the third candle's low here in that swing high formation. That's normally the cue point for me. Not every time does it work. But I'm saying statistically, over time, you're going to see, wow, it's that simple to find trend. Yeah. Cat's out the bag. It's been out the bag for the longest. The cat's been out the bag for years now. Like, the information where I got this from was released to the public in like 2016, 2017. At least from where I learned it from. It was according to ICT. And a couple free YouTube videos. Not even paid mentorship. Free YouTube videos where he literally told people how to find bias. But somehow people overlook the content and the educational purposes, and they want to know all the models, but can't find bias. What happens here? Look how it breaks. Excuse me. Look how it breaks that third candle's low. You have a high probability odd that this low now is going to get ran. Showing you multiple models in like one model. High probability rate. Shotgun. Boom. At one point in time, you find a sell scenario, either London or New York. It's going to take you out there. And you can see how, look how this is so much different from what I showed with the UJ buy scenario. Look how it's a large candle. Look how small the next day is. Still takes out the low, but it's not running all the way down here. No, it's not doing that. If this candle was small, probably. Then we'll probably get a larger candle the next day. But we don't get that there. And at that point, what would you do? You'd probably look to take out sell side liquidity. Over and over and over again. Until the same thing occurs. You break a swing high, the mindset shifts. And then you could find a trend. Now that trend may last only a week. That trend may last 2 weeks. That trend may last 2 months, guys. I want you to know that. Markets trend in periodic times. Look the entire way of February. Look at that. Look how easy you could have found the daily bias on February for UJ. What happens? Price breaks a swing high, false break clearly because they broke a swing low. So what would you expect after breaking a swing low? A lower swing high. You don't get that. So clearly it's a false break because it breaks a swing high. Price breaks the swing highs here, clean highs, and creates what? A higher swing low inside of what? The fair value gap. Right? Inside of what? The breaker. Price trades right back into it. Creates a higher swing low. Ever since then, what happens? Buy side. Look at the trending market. It just wants previous daily highs. Doesn't care about the lows. Look at how they protect every single low on the way up. Yes, there are going to be times on the way up it takes out the low. It's just a sell stop raid to get retail traders out of their longs. And then for them to push it in their intended direction. They don't want you making profit with them either. They want to offset large funds. They want to offset the guys and gals in the market that have huge accounts, huge hedge funds. They want to offset those people. That's what's going on here in the market. And that's how you find trend. Now, if I were to go to AJ, and I'm just going to run through pairs and answer questions at this point. AJ, same thing. Swing high broken. What happens? You get a lower swing high. This is a perfect example of what is currently happening in price. Look at how previous daily highs keep getting broken constantly after that swing low. High. High. Not a single low broken here. And you're telling me you can't find bias in the marketplace in 2023 with all this information out. You still can't find bias. Yeah. I just showed you it. You just caught a short-term trend here. After this swing low, third candle's high broken, high probability buy. You can probably hold for the next 2 days, next 3 days. Whatever your filter may be. Hold to the end of the week. Everyone's got their unique ways of taking profit or scaling out. Got to find what works for you in your life cycle. Because I know some people who have full-time jobs. I know people that have in another full-time job being a parent. I know people that are parents that trade. Another full-time. I know people that have partners or have a significant other or a wife or a husband. Yeah. You got other duties and other responsibilities. Make it simple. Don't trust this market. Man, I'm only 24 years old, and I try to tell people, me, as young as I am, telling people not to stress about the market. Don't. Tell you. Because it's easy. It's right there. You just keep falling into bad habits and bad patterns. And you keep going against the model that you already know that wins. Please subscribe, whatever. GGP, EA, copy, NAS 100, no problem. Cool. We'll go through all those. Keep doing this. Keeps clicking off the screen. My bad, guys. All right, the breaker. Example. Do I have an example? Yeah, I do have an example, actually. G. I always put the breaker and the mitigation backwards. Oh, I always do that stuff all the time. I always say buy side is sell side. I always say things are backwards. See how price comes down and takes this price out, right? Price comes all the way down, then comes back up. Look at the two highs. One here. Between that. Here to here. This high. There's a swing high here. And then you got a swing high here. Look how price comes back down. It's not even labeling it. Nice. Why is it doing this? Okay, cool. Retail traders went short. Price comes back up. And they're looking to mitigate their losses. But what did they do? They break a low. Difference between the mitigation and the breaker. The breaker breaks a low. The mitigation is a failed low. So instead, if price were not to break, if price came up, came down, and then created a higher swing low instead of making a lower low, and it traded into that high here, boom, then you go higher. But instead here we break, and then we come back up. And then what do all these sellers do? They're trying to mitigate their losses because they got caught in what? A false break. That's all it is. They got caught in a false break. Here. Oh, dang. Price is turning around on me. How am I going to mitigate the losses that my stop loss was hit down here? My SL hit down here. How else can I get into the market? Because knowing that it's changing trend or that I got caught in a fake move, I need to buy. And where they're going to most likely buy again? Back down on the breaker. And then they push price higher. That's what's occurring there. Hopefully that answers your question. That's basically what a breaker is. They just want to mitigate their losses because they got caught on the wrong side. It's the same thing inverse. You get a false break up, then price comes down, then trades back into the short-term low. And then it goes higher. Goes lower. And please. Alright, so first person said NAS. I'll do NAS. Aaron said NAS. I'm gonna do Owanda. Alright, so first, just jump on the weekly chart. Jump on the monthly. Okay, nice. Okay. Nice. Okay. Just overall, looking at the chart already, Aaron, right? This is for Aaron. I think it's Aaron that said this. I can already see, just looking at where price has came from, right? We broke a swing low, and after breaking this swing low here, 1, 2, 3, we have yet to make a lower swing high. It looks like price wants to keep pushing back up to this swing high up here. So I'll draw this out. Not like that. Look how price takes out this monthly. All these ideas are fractal. Monthly swing low. Trades around there a couple times, trades around there a couple times, and then finally it gets out of there. With speed too. It's not like it's stalling and giving small eeny beady candles and running away. No, it hits this level, comes up, hits the level again, gives you a down after this down close. Look, that's where the buying comes in, the down close. Because on this month, probably December 2022, everybody thought that NAS 100 most likely was going to keep falling over and falling over. And what do they do instead? The next month, they buy it. That puts everybody in shock. You're like, what? Goes up. That's how I think about the marketplace. I just think a little different. Goes up. Large. Now it's small body. Large again. Most likely, odds are, another small candle that you're getting. And it's down too. It's already below the opening price for the month. I can speculate, and I would speculate on the monthly chart, just on what I'm looking at, next month most likely is going to be a large candle, and it's most likely going to close up. And what is it going to most likely take out? This obvious area of buy-side liquidity. For price to take out this swing low, And to get back this high, as the market maker, would you stop price from going above this swing high? I think everybody would say no. I think I would want to run this high if I was a market maker. So we'll keep that high on there. So we know that's a monthly high point. This is an August high. We'll just put it as August 2022 highs. Drop down to the weekly chart. See what's going on as well. Did we recently break any swing high? Any swing high on the weekly chart? Yes, we have. What's your most recent swing high that you broke on the weekly chart? We can see it's this one. Right there. That's your most weekly swing high. Same idea. Now Deontay's what? On high alert. What do I have to wait for? Most likely a higher swing low relative to the most recent swing low that we have. What's the most recent swing low that we have here? That's your most recent swing low. We can tell that they're buying. Why? How do we know that they're buying? Because it's higher swing lows. Look at this swing low here. Which one's lower? Unless it's a double bottom. Ooh, is it? Nope, this one's lower. So there's a swing low here. Purge, revert. Look at how it purge, revert, and it's a weekly. You can use this on the weekly time frame as well. Just because ICT taught it on the daily doesn't mean you can't sit here and say the idea is not fractal. Purge, revert, look back the last 3 weeks. Instead of the last 3 days, look back 3 weeks. Look at where price is. Takes out all the weekly highs. Another idea. If you were looking to use it on the weekly chart. Purge, sell side. Market break happens on this candle. No, does it happen on this candle? Happens on this candle here. So price comes up. I think my brother's on. I'll be right back, guys. Give me 1 second. Sorry about that, guys. Just had to say what's up to the fam. My brother came home. Swing high broken. I'm going to wait for a higher swing low to form at this point on the weekly chart. Now, does that mean that you're going to get a higher swing low immediately? No. You may be waiting for a couple weeks, honestly, to get one. Most people won't have that patience. But is it a most likely successful or more theoretical setup that will guarantee you more success? Odds are, yeah. Because we see it time and time again. Look what happens when price breaks this swing high here. Imagine the people that waited for this swing low formation to form and how they potentially caught all this to the upside. The same idea, high probability buy scenario. Look at the high here. This is the third candle in that swing low. 1, 2, 3. Right there. 1, 2, 3. This candle's high is broke. This candle's high breaks this candle here, the third candle in the swing low. What are you most likely going to look for? A high probability raid on this high here. You see here, it comes up and runs it right there. Price opens, runs up, takes out the high, and it falls back down. Now, this is not to say every time you're going to get that nice one where it keeps going up like the other examples I showed you. It's going to come in different forms and fashion. You're not going to get one that runs up like this. And it's the high probability scalp that runs crazy. I would prefer that. Everybody would prefer that, of course. But do understand the market will give you different things. Market takes out the high, quickly pulls back. Could this be a topping? And because people say, argue, say, how don't we know it's turning around here? How do we know if it's not purge and revert here? It could be. It's a model. Follow the steps. Step 1, step 2, step 3. And execute. And if you get it right, you get it right. People try to overanalyze and drive themselves insane. And then they look at 8 different asset classes at the same time. Dog, look at 1. Look at 2. What am I looking at all 10 for? Unless it's intermarket analysis. Okay, I'm just comparing it. But I'm not going a deep dive and going through them super thoroughly. I don't sit here looking like I'm trading AU for the month. I'm not thoroughly going through GU on the 5-minute, 15, 30-minute, 4-hour. No. Deontay's daily, weekly, okay, 15-minute, 1 minute, execute. Done. Call it a day. Everybody's, but what about the 30-minute? What about the 4-hour? What about the 4-minute? you can't pick everything. You can't. I can't pick every single time frame. What, I'm gonna break down every single time frame? The chart's gonna get messy at one point in time, and then I'm gonna be confusing myself. I need to pick a side, and this is the easiest way for me to clean up the chart. Swing highs, swing lows, break. Okay, breaks here. Now we get the raid on that high here. Now at this point, after price breaks this high, Aaron, I would say wait for a higher swing low, and see if it targets that. If you don't get the higher swing low, right, and you get and you see price break a swing low, and odds are I don't think it would come. I don't think it would want to come down here. If it does come down here, that's a strong conviction. Because think about it. If you're the market maker, for you to want to push price all the way back down here, you clearly have another intended direction for the marketplace. It's not up. Especially if you brought it all the way up here and you're going to pull it back down here. Why would you want to pull it back up here again? I don't think you would favor that. I think you would probably break. Now we're going to change trend. And now we're going to go lower. That's what I would favor there. So that's what I see on the weekly chart right now. Still would say NAS 100 still bullish. Daily chart. One, two, three. You break it here. We come up. Yeah, after the break we did. Yeah, yep, nope. Still bullish in my idea. In my stance right now, I would still say NAS 100 is still bullish. Market structure is still looking very bullish. Price breaks a swing low here. Even this one here. But after breaking these swing lows, 1, 2, 3. 1, 2, 3. After breaking those swing lows, what does it do? Quickly runs back up to take out buy side. And what do we have above these highs here? Buy side liquidity here, buy side liquidity up here. And these are 3 down closed candles. Look how quickly this large candle easily recaptures ground. One candle captures back ground on these last 3 down days. It is range bound as well right now, so they could be reaccumulating orders. Swing high broken. Wait for a higher swing low to form. And one of these swing lows is most likely going to take you higher. So that's what I would speculate for NAS. If I had to break it down from IPTA, I'm doing this with Aaron. I'm going to do this for Aaron. And I look back 20 days to do it briefly. What's this day? Yeah. I look back 20 days from April 3rd. I try to find my highest high and lowest and lowest low in that quadrant. So that's the lowest low. And that's the highest high. So we can see we recently broke the 20-day high. We got a small reaction off of it. You can see how it, like I said, this is a model in itself. Like I see this constantly. I mean, looking at NAS 100. This is another example. Because I know some people will remember I said this earlier in the video. Look how price takes out that high. Is that the highest high? Yeah, it is the highest high. Price comes up and takes out the 20-day look back high. And instantly after taking out that high, we get selling. Does that mean you get the selling and then it continues trending down for the rest of the month? No. Sometimes it is. I've come across plenty of examples over the years where it does that. Takes out the 20-day high, runs all the way back down to the 20-day low. Those are sweet scenarios. And if you look at the IPTA data range library that I have on YouTube, each scenario basically shows that for multiple months. Already, and not past months. This is recent data. 2023 data. I'm not going back and showing old IPTA data ranges. I don't have time to go back and try and show people the old ones because nobody wants to go back and look at it. But it happens year after year. Takes out the 20-day high, price comes back down here. I'm not fully convinced that it's going to keep going lower. NAS 100 as of right now. Is it due for a pullback on the weekly chart? Yes. Where could it pull back on the weekly chart? I would say here. If it hits this again, I would go long. I would break this range high to low, find fair value gap, find fair value, buy below discount, and look for higher prices. Because all of this is look. If I had to look at this, all of this is balanced in. No gaps. Fair value gap respects it. Price comes up, respects it. Price comes up, makes a higher swing low. Another fair value gap. Price hits it once more. It's probably getting ready to get out of there. Or we come down during one of the weeks and we get through this. So let's say price comes down and gives a strong wick, and then it comes back up. Purge, another revert, weekly swing low. And we go higher based off the weekly chart. So hopefully that was insightful, Aaron, for you. And it's all speculation. I'm not saying it's going to get it 100% right. But time and time again, the fundamentals don't change. It just doesn't change. Chat. EA. No problem. Anytime. When all 60 day. What happens? Nothing happens. Nothing happens. Because if you want to see what happens, I can show an example. And recently I did one. The last month, because somebody this is a brief question. Here it is. Do I have it on the chart? Did I have a screenshot of it? I know I do. It's a video. Next in April, GU. I don't even have. Oh no, I know I took a. Did I take a picture of it? Ooh, it's all videos. See, this is why I like to document in pictures. All videos. Dang. I'll pause the video though, because it'll show you where price clearly was going. I want the most recent or last one that I had. Okay, it was this one. I'm gonna pause it though, because I know it's gonna play. I'll just mute it. Yeah. You can see here, look how just as GU, price comes down, up, boom, into the breaker. I don't know why I thought I had marked this as the mitigation breaker, because I always say them backwards. But the breaker is the one that breaks the low. You see how it comes up, comes down, trades back into it. Look how price takes out the 40-day low, and then after taking out the 40-day and 20-day low for March, look how price finds its way all the way back up to the 60-day high. It's right here. These clean highs, 40-day high, 60-day high. Where's GU right now? Look at where the price point is. Look at, let's say, big figure number 1.24. If we were to go to GU right now, that was the 60-day high. That was the 40-day high. You know, it takes it out here, get pulled back here. Price takes, and then price comes up, takes out another swing high here, and then we get another pullback down here. So that's where we stand right now. It's not that anything special happens. It is taking one side of liquidity. But it doesn't mean, oh, now it takes out the 60-day high, now we drop to hell. No, it doesn't mean that. It doesn't necessarily mean that. Because it could take out the 60-day high and still want to look for what? Swing highs on the left side of the chart. Something more recent. But it's all up to you to understand where the market is going to go and follow trend. Follow suit. If a swing low is broken, you may have a potential change in trend there. Or if you look at it from a day-to-day perspective and you look at your swing highs and swing lows, purge and revert. You have a model, follow the filter, see if it follows through. You're not going to always be successful, but you're going to hit one. And you're going to hit a couple. And you're going to hit enough to be satisfied. I know that for sure. Now there is Euro A. Okay, no problem, Kim. Euro AUD. I think I'm gonna end it with the yen crosses too, just to show how they're correlated. I'll take a deeper dive too here with this. So, because it's different. This is not something I would trade personally. I'd trade the majors. I would rather trade EU or trade AU. That's how I would rather trade. But I would go to rates here, right? I'll go to global rates and take it a step further because I know I did IPTA for Aaron, so I want to break down something else for someone else, for Kim. So I would look for the rates. RBA. RBA just stands for Reserve Bank of Australia. And people, that's how you would Google it if you don't know. We currently got a rate of 3.6. They've kept their rates the same. Odds are I think they're probably going to hike it again. We don't know. But they kept their last interest rate decision. They kept it the same, which would show signs that they think inflation is coming down and the currency most likely will roll over. Just the same way with the DXY. But now the Fed's either going to see if we're going to push price up, push another rate hike. Are we going to do another 25, right? Are we going to do another 50, 75, a full point? We don't know. Odds are they're saying that it's all the central banks are slowing down on their rates. We're starting to see rates probably slow down and then probably get cut. We don't know yet, but let's see. 3.6, and then the other currency was euro. They're relatively close, so it's not a huge interest rate differential. You got 3.6 and 3.5. Not a big difference, right? Compared to like this. This is why I said these yen crosses, you guys should be eating that. You should eat like cake, like dessert. Like this, all the yen crosses, I think everybody should be on top of that. Because negative rate. When you look at something that both have positive rates like this, like Aussie and Europe, it's a little tricky. Not to say price action still won't follow suit, but it just wouldn't be something that I would be like, I'm not going to find a super mega trade out of this. Because the macro was already not showing me signs that one is very, very weak. They're potentially both strong currencies according to the rates and their yields. They're relatively close. It's not a big difference between Aussie and Euro. And they both technically move the same way against the dollar. So that's why I try to stay away from these pairs personally. And like the majors. But overall, if I were to look at it, currently, who has the higher rate? 3.6. So Aussie has a higher rate. Not a big difference though here. It's a 0.1 difference, not a big difference. Monthly chart. You see on the monthly chart, we recently broke a swing high here. We also broke a swing high here. And we're just about, every time I do this. And we broke another swing high here. So it looks, still, in my mind, still looks bullish. Still looks like it's pushing up. Just took out this high here. Go on the weekly chart. Now we just took out buy side. Took out huge orders of buy side here. These are relatively equal highs here. High, 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 high. Is there any other highs that are close to it? Here. Do we have any inefficiency here as well? We have one all the way back here. Here to here. We have yet to touch it. What is this also as well? BPR. You can see it's a balanced price range. There's a fair value gap on the left side, the buy side curve, and there's a fair value gap going down on the sell side curve. So you got a busy buy side imbalance, then you got a SIBI sell side imbalance right here. So there's a balanced price range. Price has yet to return back into this balanced price range. This is where a short scenario could definitely unfold here, because this is balanced. So if price comes back at that balance point, should go lower. Going down, and currently on the weekly, we got a higher swing low formation that just formed as well. So let's say we took this recent swing high here broken. Same idea that I'm following to find trend. Just showing it on the weekly chart. Swing high broken. We have a higher swing low already forming. 1, 2, 3. This is a lower swing low that we can see here. And that is a higher swing low that we can see here. So market makers look to be pushing this price higher again. What are they doing in this swing low formation? getting people to probably go short. What is this? Probably bullish order block theory, right? Last down close candle, price is running away, trading into it, now trying to make higher highs. So still bullish. If I see, like if I was looking at from the weekly chart, if I see this high broken next week, I would be more confident to probably keep buying. If I get any down weeks, I'll be like, next week I'll be a buyer. But like I said, higher time frame, higher risk to reward, higher equity is required, and a higher stop loss is required. Unless you're scaling down on lower time frames and finding low risk entries, there you go. It takes some time to catch those lower time frame entries, low risk entries, I would say. And I'll drop down to the daily. Swing low recently broken, could be a false break here, or it could be a momentum shift going back bearish. But you can decide on what you'll get next moving in the next couple of days. Do you get a lower swing high, or is this a false break and then price comes up and takes out the swing high? Or as you can see, this swing high is the actual weekly high, Thursday's high. So that's what I would speculate for EA personally. I'm not sure what the spread is on this, but yeah, that's what I would be speculating for Euro versus the Australian dollar. You got two strong currencies. Just difficult, you know. It's easier to see one currency that's very beat up and the other one's really strong. And you'll see those large moves. But overall, the market will still follow structure. And that's what I would speculate for Euro versus Australian dollar. And let's check again. I know somebody said Euro GGP, same. Yeah, it's the same thing. Two strong currencies. I would rather settle for GU or EU personally. Like, I just, in my logic, it's like no disrespect or anything. I just think it would just be more reasonable to you as a business trader, you know, as a business owner, to take things that are less risky. Euro versus British pound, same idea. Like, I would come here, look at the rates, right? Euro, the bank, 3.5. Great Britain, Bank of England, right? European Central Bank, Bank of England. Bank of England has the higher rate. So overall, not even looking at the chart, because I don't look at euro pound. I could probably assume that maybe it's bearish, just off of the rate. Just taking an educated guess. Okay, higher rate, maybe they're most likely trying to put their dollars or put their money into British pound. So let's just take a look at what that looks like. Euro, GGP, and the spreads for this are probably like, unless it depends on where you live too. Spreads probably are different, but I know if I were to look at this spread for this pair, wouldn't be worth my time. Tight. Oh man, the weekly chart is just range bound. Tight. Really looks like they're reaccumulating price action here. Price ran up, came down, building up orders, slowly rising it. Monthly chart before we go anywhere. Swing high broken. Large wick here. Large wick here. Overall though, overall for his chart, for a monthly chart, man, it's been in sideways, man. To trade this, man, basically playing tic-tac-toe, like back and forth, compared to like, this is exactly what I say, like you're taking two currencies that are just strong. Look at how this monthly chart looks different, showing signs to move, showing signs to get out of there, versus euro sideways. Still sideways. Still hasn't really shown one stance. Just range bound between a highest point and a lowest point that we currently have. So let's say the highest point would be here, and the lowest point would be here. We're just trading inside of these two data points right now, currently. Just two strong currencies that you're trying to battle out and duke out, when you could settle for a weaker one and a stronger one. But overall, right now, currently, Looks bullish, but I wouldn't forsake it and say that. It looks range bound. It looks like it can easily pull back down, fake move up, pull back down, and we don't get back to this wick high. And they seek and destroy. They keep playing with traders back and forth. Weekly chart. A little more data. Break and swing lows. Good sign. So if we get a lower swing high formation, 1, 2, 3. See this candle here? We have yet. See, this is why that third candle is so confirmed. See how this third candle. So in itself, it's a little complex idea. You have to have a good eye for this. What is occurring here? A swing low is broken. Now we could see, okay, there's a potential false break because we broke a swing high here and we have yet to get a higher swing low. We have a failed swing low. 1, 2, 3. Third candle's high is not broken. Price breaks down instead. But we do have a swing low formation that's broken. 1, 2, 3. Broken here. When that breaks, do we have a lower swing high formation? Yes, we do. Where is it? It's here. And in its essence, too. Like in these bars here, it's all formulated together. The swing high is here. 1, 2, 3. What side of the candle is broken on this third candle? The high. So I would rather the low being broken if it's going to continue going lower. Because if it's a lower swing high compared to this high up here, to this lower swing high, I'd rather the third candle's low being broken to give me confirmation to go short. Instead, its high is broken, which tells me and suggests to me it's not following my steps or my check boxes as well as I want it to be, in the way I normally see it flow. The high being broken here suggests that probably it's a failed swing. It's not going to go any lower, and it's probably going to continue going higher. And I can see now, currently in price, we still have yet. We only broke the third candle's high here. We never broke the third candle's low here. So you can see how market most likely is going to keep coming back up because we didn't get that third candle's low broken in that lower swing high here. 1, 2, 3. And that purge here, then the revert. Price has yet to come back down and try and take out any of these lows. It's still range bound. I want you to see this. It's still in a range. All this price action is all still in the range. Versus something like this. And that's the weekly chart. Look at euro versus AU. I mean, euro versus US dollar. This is why the pairs you pick really matter. You know, it's the same way. What degree are you getting at college? Are you going to just get an associate's in liberal arts, or are you going to get a doctor's degree? That's how I feel about it. You wouldn't pick pairs that are going to be primed to move. This market is moving. It's not range bound. This market is trying to get out of there. Has not been range bound. This is a healthy environment to be trading in. I don't want to trade in reaccumulation. I don't want to trade in consolidation. It's not worth my time. And how do I kind of avoid that? I trade currencies that are beat up. Right now, the dollar is shot, guys. Shot. I don't know if you guys recently saw the dollar. The dollar is shot. Shot. Everyone's beating up on the dollar right now. Look at it. Dollar's shot, man. It's dropping. Why would I look at euro pound? I'm just trying to keep it real. I wouldn't sit here and lie to you guys. I want to be honest with you guys. Why would I pick euro versus pound to trade? Why? It just doesn't make sense to me. I would rather pick something that's weak. I'm not going to pick a currency pair they're both weak and they're both strong. That's like putting a magnet both positive on positive and the magnet won't stick together. I need to take the positive pole and the negative pole and then they click together. That's what I'm not trying to put a plus and a plus together. I'm trying to put a plus and a minus together. That's what I'm doing with all the pairs. Right now, euro's a plus. Right now, dollar's a negative. Good to go. That's a good pair to be trading. But then when I jump into those crosses that people would want to jump into crosses like this. I just like it's not a good example. I rather the foreign currencies like something like what is that AU. Like someone will jump into something like this. I wouldn't want to trade this personally. Yeah, still following the macros. You can see, look, British pound has the higher rate, 4.25, 425, 3.6. Who has the higher rate? The Bank of England. Look at the price action. It's not going to be this obvious all the time, but look at the price action. Where they're most likely putting their money into British pound, not Australian dollar. Quick, easy ways to find macro analysis is the interest rates. Am I checking them every day? Someone asked me that. Am I checking them every day? No, because they don't change every day, guys. They change every couple weeks, every couple months. The central bank makes a decision whether or not they're going to raise it, keep it the same, or decrease it. That happens year round, guys. If you are new to like understanding how money works or understanding how monetary policy works around the world, they're not doing this every day. It's not like Fed Chairman Powell was talking to his Fed chairmen and saying, are we going to increase the rate tomorrow or we're going to decrease it tomorrow? No, it's every couple months, every couple weeks that they're going to come to that decision. Same thing in Australia, same thing in British pound, same thing in all the central banks around the world. Because you can see here, if they were changing it every day, why is the Bank of Japan still negative? When's the last time that they changed it? 2016. 2016 is the last time the Bank of Japan has changed their rates. And they changed their rates from being positive to actually negative. And now look at what their currency is doing. Shot. Nobody wants yen. Would you want to put your money into dollar yen if you were getting a negative rate? I don't think so. Would you want to put your money into a savings account that was giving you a negative return? I don't think so. What would you most likely do? Put it in a positive return. Now, I know some people are going to sit here, oh, what about Chile? It has 11.25. Look at their GDP. Not trying to say, oh, people from this place are certain people. No, just look at the GDP and look at their economy. I'm not putting my money into this dollar. No. Where am I going to put my money into? Well-established countries. That's just how it goes. I didn't make the rules. That's unfortunate to all. Hey, I'm not going to get into the politics, but I didn't make the rules the way that things work. Where I'm going to put my money? Dollar, Australia, pound, CAD. Not China, China, yuans, yep, euros. No, I'm not going to put it in Hungary, no. India, the Indian rupee, possibly, yes. Indonesia, no, not really. Israel, no. Japan, definitely not. Mexican peso, no. Not putting my money into Mexican peso, guys. You tell me what person around the world is saying, I would trade my currency, their current currency, like me living in America, living in New York. You think I'm trading my US dollar for Mexican peso? No, I'm not. I'd rather trade it for gold, if anything. New Zealand, yeah. Norway, no. Poland, no. I'm not looking. No. Russia, no. Saudi Arabia, no. South Africa, no. Sweden, no. Switzerland, no. Turkey, no. I'm looking at all the countries that have great GDP. India is definitely on the rise in population too. Good investments over there happening in India. But that's how I would personally look at the charts. Just want to see. I know there's some people in the chat that said something on Telegram. Let's see. I don't even know how. Oh, it's 10:10. Make a wish, guys. I'll be excited to touch on these too. I just did pound AU. Look bullish. If I had to give you a quick, simple way, not to cheat you or anything, but like I said, Bank of England has a higher rate than the Bank of Australia, right? The RBA. It's breaking a swing high. It's creating a higher swing low formation here on the weekly chart. So I would look to be a buyer after this candle's high is broken based on the weekly. Come down to the daily. We have a bullish order block theory here. As you can see here, these two down close candles. I'm mainly concerned with the candle with the bigger body. I don't care about this small one. This one here, down close candle, price is trading down into it. Looks like we're going to probably get some reaction away going into next week. So pound, Aussie, I would say higher prices. We also did what? We broke a swing high formation. So what do we need? We need a higher swing low compared to this one here. So the next daily candle, if it was going to do it, this is how it would look. Like that. It would have probably maybe a wick or something, but the wick doesn't break the low. Then this next candle here, then the market makers start pushing for buy side. It's literally what happens constantly. Over and over and over. This pattern is like the only pattern that I see when I look at the charts, guys. Because I know it's the only important one that I really need to pay attention for. The higher swing low or the higher high. Or the higher swing high. And that's what I would speculate for pound versus the Australian dollar. But if we don't get that, if we break this low here, odds are we're coming down. Coming down. And that's what I would speculate. Euro CAD. Euro GJ. I'll do Euro GJ. Maybe the last one. I'll do all the yen right now. Because it's the most important one that I've said this before in the Forex Fridays. I think the yen pairs are the most important pairs that you guys need to be focusing on for the next couple years of your trading career. Why do I say that? Because nobody wants Japanese yen, guys. It's like, it's night and day. You set yourself up for more success. Like I said, you're gonna go to college to be something that doesn't make any money, or you're gonna go to college do something that's gonna make money. You're gonna go to college, spend all that money. You better be coming out with a career that's gonna pay you 6 figures. And going there spending all that money and you're in debt just to be stressed. I had it on this. Yeah. Nope. It's one of these. Yeah, I know what it is. I'll do it myself. Lab work here. I really appreciate you guys, by the way. Appreciate you. No problem. Last thing for the night, man. The yen crosses. Once again, I just want to leave you guys with things that just will make you be thankful that you paid attention to Forex Fridays and to what I had to say. Overall, all the yen pairs move in the same direction. Whether it's dollar versus yen, Aussie versus yen, British pound versus yen, euro versus yen, CAD versus yen, Swissy versus yen, New Zealand versus yen. That's as far as I'll go. I'm not going to go into other ones. But as of right now, delete this because I changed it up for you guys. On the daily chart, price action is what? Turning back bullish because it broke a swing high, created a higher swing low. What is going on for the other other yen crosses? The same thing is happening, guys. Same thing is happening. Look at Australian dollar, top right. Swing high broken. We get a higher swing low. Look at it trend. Look at it trend. Beating yen. You think people from Australia are saying, yo, I need to take my money and buy yen? No, they're absolutely shot to do that. You think people in the Euro nations are telling themselves, yo, I need to take out my money and go buy Japanese yen? Impossible. Like, it doesn't make sense. Same thing here, British pound. You think people out there in the UK are taking their pounds and changing it to yen? And you definitely think people with US dollars are taking their dollars and switching it to yen? No, they're not. They're definitely not. Why? Because of the simple principle of the negative rate, the negative yield of return. Not getting any return holding that currency. And as you can see, time after time, it's still bullish. It's finding a way to beat the yen. All the currencies are finding a way to beat the yen. Yes, there are going to be periods of time where the yen gets a little stronger and other foreign currencies come down. But then you see time and time again, as time goes on, you see price action keeps going higher and higher and higher. Just look at the monthly chart right now, currently, for dollar versus yen. Look at how high this is. This is the monthly chart. Just looking at it. Does that mean that is there a correction due? Potentially. Who knows? Let's say it comes all the way back down here. But ever since 2016, it was always negative. That's 2016 here. It's 2016. Here. 2016 is when they lowered their rates negative. Okay. Dollar took a blowback. But look what happens. They create a fair value gap here. Right here. On a monthly chart. Trades into it for multiple times. Price looks like it's just declining. Looks like the dollar is going to say goodbye at that point. Everyone's like, dollar's shot. Dollar's not coming back. What happens? Comes back. Hulks. Really strong. And that's when COVID hit. That's when the Fed started raising their rates. And who had a higher rate than the Bank of Japan by COVID and lockdowns? The U.S. Feds. They definitely had a higher rate, for sure. They were already positive before that. And it was a matter of time till the central bank and interbank traders ate that up. And they brought UJ. They brought U.S. dollars. Same thing here. You look at GJ. Go back to 2016 when the Bank of Japan said we want negative rates. I think it's 2016. Just want to make sure. Yeah, 2016. Last change. And ever since then, pull back. But look how over time, look at how the pound has slowly been trying to outpace the yen. Look at the trending market. It's trending. It's clearly trending. Look at the monthly chart. This is the monthly chart trending back up. This is not sideways price action, guys. This is the market moving, not in a straight line, because we know it's not in a straight line. It's higher swing lows. It's going up, coming down, going up, coming down, going up, coming down, going. That's what it's doing here. And it's slowly but surely keeps outpacing yen. All those down months, look what happens after it. We go to euro versus the yen. Euro versus yen, clearly outpacing once again. Go back to 2016. Start of 2016. Once again, euro outpacing yen. Just going higher. Higher and higher and higher and higher. And look at where we are. Probably back into 2014's highs. So close. Look at that. So high. Aussie yen still going higher. Ever since 2020, look at COVID. All the central banks started raising their rates. Who was the only one that didn't say? Who said I don't want to raise my rates? The Bank of Japan. Japan put themselves in a bad position. They were the only central bank that didn't raise rates. And look at where they are. And look at what happened to their currency because of that. Everyone is not going into their currency. Look at how Aussie, easy buys. Night and day. New Zealand, yen, same thing. Doesn't matter which yen cross I pick. Up. It's up. Swiss yen. Even worse. Even worse. All-time highs. Look at that. Pushing all-time highs versus the Japanese yen. What's the Swiss rate? Where are you at? Here we go. It's 1.5. Definitely better than this negative. And look at what happened with price action. Look at that bullish super cycle. Anybody could have called this. Where did it all start? That fair value gap on the monthly chart. And I have people tell me that, higher time frame PD rates mean nothing. So what is this? So what's this? What's this higher time frame busy doing here? What, does the market just forget about the monthly fair value gap? No, it doesn't forget about that. Clearly came down, showed signs of respecting it, and then ran higher. As soon as they started increasing rates. See when the last time they raised rates. Last time they raised rates was March 2023. The most recent one. And you can see price is still going up and they're raising rates. Look how it's following the yield, guys. It's not buy pressure or sell pressure. We know it's not. We know it's just transactions and them trying to make money. That's all it is. They're trying to make money, guys. Just like me and you. They're trying to make money. But they're thinking about it in a different stance. It's an investment. I'm not buying yen. You're not going to see me as an American stacking up on Japanese yen. I would be foolish to sell my dollars to grab Japanese yen. In its current state, possibly. But if I lived in any other country with a positive rate, like if I lived in the UK, you think I'm going to give up my British pounds? You think I'm going to give up my pounds for Japanese yen? Okay. Alright. If you think so. And that's simply it. And then gold. Gold. I said this last time. Gold is just outperforming everything this year. Everything. Gold is outperforming everything. See that breakdown? That false break here. And they run it lower. Same thing. Look at how did we end up here? The last one for the day. How did we end up here in price action? How? How could we have speculated price to go up here? All started with that. All started right here. Swing high broken. What does the market give you? A higher swing low. Ever since then, you had more confidence that gold was most likely going to rally. Check your other markets like Euro versus the US dollar, Pound versus US dollar, AU versus US dollar. See if they're doing the same thing. If they are, odds are gold's going up too. And then that would mean you could probably find a good sell scenario in UCAD and USWISI. Most people don't look at these things either. What has UCAD been doing when the dollar since the dollar has been declining? Dropping. Look at that lower swing high. Ever since that lower swing high, high probability scalp, sell. Look how they're dumping it. And it started where? How did we get here? It all started with this. Break that swing low. And then we get what? A lower swing high formation compared to the one that we relatively had before the break. Right there. That's how you find the bias, guys. It's not as difficult as you think it is. Take some time to understand, okay, swing high, purge, revert, okay. But if you follow the framework of the swing high, swing lows, you'll be golden. USWISI. Terrible time, right? Look at just dropping. Just melting. Look at that. Look how it's just breaking over. Breaking swing lows, creating lower swing highs, multiple lower swing highs. Many opportunities for you to do what? Find shorts. Price comes up, comes down, breaks the swing low, creates a lower swing high. That's how we got here, guys. Just following that idea. That's how you could have speculated price continue dropping. That's how I find bias. And that should be well solidified tonight. After today, nobody should have questions about whether or not dollar's going up, gold's going down. The information is out, guys. It's my pleasure, guys. If anybody has any questions, please let me know. I appreciate everybody that came out. I appreciate all the support. I will continue to do this every Friday night. Man, it's been a pleasure. I'll just wait a couple seconds to see if anybody is going to say anything, because you might be typing. If not, man, it's been a pleasure as always, man. It's just straightforward. It's like right, your eyes. Just open your eyes and you see it. I think that's it. Yeah. I think we are set. this will be posted on YouTube too. Ah, love from India. Appreciate you guys, man. Love, man, love, much love. Love from Texas. Big up Texas. Shout out Aaron. Yeah, man. Yeah. Love to everybody else too, man. I want everybody to win. Like, I don't want to gatekeep anything. I want every trader to win. You can't take everybody though. That's just how it goes. You can't help everybody. That's just life. So all in all, it's your boy signing out. Peace. Stop the zoom. Zoom, 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 zoom.